Hello, 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 everyone. My name is Patrice Malloy. I am the Influence CFO. I am your resident badass accountant and master tax strategist. And I want to talk to you about something special today. At the time of this training, it is tax season, but I want to help you understand how to leverage your tax code to win at the tax game all year. So that's what we're going to be talking about today. We're going to be diving into how to cover your assets and win the tax game. Now, one of the things I would love to really share with you is why I am here. I am here because I am determined to empower women to build a business that is sellable and scalable. We do that by leveraging things like profit first strategies and frameworks, by implementing fractional CFO strategies and tax planning that is going to help you take your business to the next level. Now that that's done, let's get into it. So, again, I said we were going to talk about how to cover your assets and win the tax game this year and beyond. One of the things I noticed when I'm working with clients, when I'm having conversations, when I'm looking at different tax returns, people are not leveraging the tax code the way they should, which means they are leaving a ton of money on the table. And that breaks my heart. It makes me want to poke my eyeballs out, and we're not going to do that anymore. All right. What we're going to do is go through some things that I think you can leverage right now, especially if you are a business owner, you are a high earning corporate change maker, you have lots of income, but you don't have things to offset that. This is what we're going to talk about. We're going to help you balance that out and keep more money in your financial ecosystem because that is how we build wealth. Now, let's go ahead and go through this. So, when you are preparing your taxes and you're doing all of your financial reports, you're looking at your profit and loss, you're looking at your balance sheet if you're structured as a corporation, you're looking at your cash flow statements. You want to make sure that you have certain pieces of information and data in there so that when your tax preparer is doing your return, that you're able to, again, take advantage of everything that's available to you. As business owners, the tax code was written explicitly for you because you do things like stimulate the economy, you provide jobs, you are, hoping to grow the gross domestic the product, in America, they want to award you. So these are some of the things that I think that you should be looking out for as you are going through your reports and as you're going through the day-to-day operations of your business. A lot of things that people forget are things like accounting costs, right? If you have accounting software, so you're doing like your QuickBooks Online subscriptions, you've got your Zero Accounting, you've got Wave, you've got Sage, you've got Drake, you have all the things. You need to make sure that you're taking into account how much you're spending on that on a month-to-month basis, and then tally it up so that at the end of the year, you're able to write that off on your tax return. Okay? You want to make sure that you are leveraging things like payroll, so your ADPs, your Gustos, whatever else it is that you're using, your QuickBooks payroll. You're using the money that you're paying for payroll, right, to support that actual process. You're leveraging that as well. The next thing we want to talk about is advertising and marketing. Sometimes we forget about that. If you're doing things like Facebook ads, Google ads, LinkedIn ads, any kind of other ads, right? Bing ads, you were able to write those off on your tax return. Okay? They were 100% tax deductible. So this includes things like the cost of doing business, so like your logos, your printing, business cards, brochures, online and ad space, like we just talked about, if it's print, website development and creation, your social media marketing, campaigns, event sponsorships, promotional mailing. So if you're, in real estate, and if you're sending out those promotional mailers to people, those are tax deductible as well. So you want to make sure that you're doing that consistently. Okay. Keep as much money in your pocket as you possibly can. You don't want to give the IRS money. We don't need to give them, right? We pay our fair share and nothing more. Bank fees. There are times when we have chargebacks or something else happens when we are assessed a fee by our banks. And I don't know if you know this, but those are tax deductible as well. So PayPal, those merchant processing fees, the Stripe fees, any of those other things, you're able to write that off too. So you make sure that you're keeping track of those items as well. The idea is to record your revenue, right? So whatever money comes in, and then you're starting to subtract things like those expenses, right? Those direct expenses and indirect expenses. So we're going to continue to go through this, but follow me, right? Stick with me because this is important and it's going to be able to help you put money back into your pocket quickly and easily. Bonus depreciation. Now, this doesn't necessarily apply to everybody, but if you have like a vehicle that you bought for your business this year, you were able to deduct up to 80% for 2023 of that vehicle's value, depending on how it's, how much you paid for it, essentially. If it's an electric vehicle, which means it's, four doors, it's something that's not like a um, Toyota or a Kia, there are different rules. So you want to make sure that you're focusing on talking to your accountant or tax professional at that time. But for all intents and purposes, you can write up to 80% of bonus depreciation off, which means if I paid $100,000 for a car, I can write off up to $80,000 in some instances on my taxes and get to take advantage of that right away. Typically, what you do is you divide it over a period of 5 years, right? So I'd be able to take essentially like $20,000 over 5 years to be able to apply to my tax return. But if you have like a stellar, year in business and you have a lot of income coming in and you're still trying to figure out how to kind of offset that, that's one of the great ways that you can do it. And a lot of people aren't aware of that. Now, let me just put a disclaimer out there. This is not for the newbie, okay? This is complex. It is finessed, and you need to understand how to leverage the tax code and how to properly complete these forms in order to do it. So I highly recommend if you've got these more complex forms, you've got things that are happening in your business like this, you want to work with somebody who can support you in that and make sure that's done appropriately. Let's move on. Business gifts. If you have clients that you send gifts to, you can write those off, but you can only deduct $25 annually. So per person, right? Now, that may not seem like a lot, but depending on how much you give, that could again help to offset some of that income that you have coming in. So that's something to think about. Alrighty. Insurance premiums. If you are like a service provider or you are somebody who has to do something like mechanical engineering or you're doing taxes or those types of things, you need to have a certain type of insurance. Errors and omissions. You have to have professional liability or general liability sometimes. So those fees that you pay on a month-to-month basis, or if you've paid for it, completely for an annual premium, you're able to write that off as well. Again, these are things that are the cost of doing business. It is an expense that you have incurred throughout the year. And so you were able to leverage that at the end of the year to offset that income that came in. Business meals and expenses, entertainment, we know what that is, right? So if you are on travel, if you had to go and see a client somewhere and you had to pay for meals, you're able to write that off, at least 50% of it. So last year and the year before it was like 100%. Obviously COVID was different. They moved differently. They let us live differently, but that's no longer relevant. They took that away. So it is 50%. So again, if you are doing those types of things, you want to make sure that you're taking, you're keeping track of that. So if you have your, business credit card, go through those statements, identify how much you spent. If you have things like a QuickBooks Online or Xero Online, you should be able to pull those transactions into your reports and be able to identify how much you spent, okay, when you're creating that profit and loss statement. So leverage those tools while you can. So let me just give you a little bit more examples, right? So meals, like while traveling, like we talked about, if you have meals when you were attending things like conventions or trade shows or, business conferences, that's able to be written off. You're hosting group dinners, at your home for a business event, you're able to take that. Or if you're doing it at like a private club or a restaurant. So these are things you really want, again, to keep it to account. So if you've hosted like a company party, you're able to write those off. A few other examples would be like meals for potential customers or clients. So it could be at your home, you did a DoorDash, you did an Uber Eats, or it could be out, you know, meals during, and this is kind of like a specialty thing, but if you were hunting or rafting or fishing or skiing, outings with business colleagues, those things can potentially be written off as well, but you want to kind of make sure you're not in a gray area. So again, those are the things that you can leverage. So if, I know people like to talk about receipts, right? If it's under $75, you typically don't have to have a receipt for it, like a physical copy, but you still want to make sure that you're keeping track of all these things. Business use of your vehicle. So the entire cost of operating your vehicle qualifies as deductible. Now, again, it's for the business use, and it needs to be owned by someone who is at least 50% owner of a business. So I'm a full-time employee of my business, and so I'm able to leverage my business vehicle 100% of the time. Okay, when I'm going out to meet clients, when I'm going out to, mail things for my clients, when I'm going out to travel on conferences, when I'm leaving to do VIP days, when I'm doing all of those things, I'm able to leverage the mileage of my business, the gas that I use to run my car, any kind of repairs, maintenance, etc., to offset because I am a business owner. You could do the same thing. Okay. In addition to that, you could do your mileage. So, standard mileage is if you don't have, maybe an accurate accounting, you don't have a whole lot of additional things like repairs or oil changes or registration fees or lease payments, those types of things, you can leverage the actual expense method, which typically does give you more bang for your buck. But again, if you don't have all of those things, you can absolutely leverage that standard mileage rate and still get a great, offset for that. So as a 23, the self-employed and business offset is 65.5 cents per mile. That's pretty good, right? So you're getting that. So if you're doing something for a charitable organization, you can offset 14 cents per mile. And if it's like a medical type of thing, a medical emergency, you have a surgery or something to that effect, you can round up 22 cents per mile. These are just some things to think about. And I'm not going to go through this whole list because it is exhaustive, it is extensive, and I'm happy to give this to you if you are in need of it, if you need the support or you need to leverage this as a reference document. Hit me in the comment, shoot me a DM that just says, the CYA checklist, and I'm happy to send that to you. By the way, if you're here with me live, hashtag live. If this is the replay, you're catching me at a different date or time, hit me with the hashtag replay. I'd love to see who's here, who's present, and I want to be able to make sure that I can follow up with you and answer questions if you have those questions. So please make sure that you are putting that information into the chat box, the comments, so that I can, again, follow up with you and connect and see how I can support you. Back to our regularly scheduled program, we're going to talk about charitable contributions. What are charitable contributions? See, this is money. It could be clothing, it could be furniture, it could be a vehicle that you give to a charitable organization. So, for instance, if you are doing something like Habitat for Humanity, you want to give like a kitchen sink, you want to give some kind of cabinetry that you may have left over from like a project or something, you can do that and you can write that off on your taxes. If you want to give cash, you can absolutely do that as well. You can also do things like tithe to your church or other religious organization. GoFundMe accounts, right? Salvation Army, Operation Kindness. In Texas, we have an organization called Look Packs where you're sending, clothing and perishables and things like that to people who could leverage them, right? Who may be unhoused or who need that support in that area. So you're able to do those types of things and write that up as well. Girl Scouts of America, Boy Scouts of America. There are tons of different opportunities that you can use to, give charitably. And you can also do things like give land. So it really just depends on where you are, what you're thinking, what you're doing. You can give stocks. You can do large monetary gifts up to, I believe it's $18,000 for this year, and then get a write off for that. So there are different ways in which you can give to your organizations and receive the benefit of that on your tax return. All right. Let's see. Some other things to kind of think about are like child and dependent care. So if you have children who are under 13, or if you have a special needs family member or an aging parent, you are able to claim dependent care expenses for them, right? So if the aging parent is in like a facility, right, a nursing home or maybe hospice, you're able to leverage some of that as an offset on your taxes as well, because that can be very costly and expensive. Okay. Childcare. So if they're in after school care, if they're in, a program like Kumon or something else to that effect, if they are in an away camp that is academically based, you can leverage that as well. So there are different ways that you can do that. It can be for after school, nursery school, preschool, those types of programs, household services. So if you have somebody that maybe comes in as an aide to support you when you're working, you can write that off too. Any kind of care that's provided outside of the home, those day camps, like I mentioned. However, overnight camps do not qualify, so it has to be during the day, right? Transportation for the children is something that you can also offset fees and deposits to like an agency or a caregiver. So like au pair services and nanny services, tax wages for qualifying children, independent care services, and care provided by a relative who was not like your dependent or your spouse, right? So if your parents or their grands, are available, you can pay your grandparents to watch your children, right? So it's mutually, beneficial. So your children are being taken care of phenomenally because like, and trust your parents, hopefully, right? And then also your parents are being able to be compensated for that support to help them. So that's something that you can think about. So things that are not considered qualifying childcare expenses are things like child support or tuition, for programs like an above kindergarten level. So secondary, private schools, those elementary schools that are private and expensive, sometimes you can't leverage that. Like I said, this is an exhaustive list, and I don't want to like go through every single one of these things, but there are tons of things that you can leverage. Cost of goods sold, if you're a product-based business, so things that you leverage, your materials to make things like healthcare or skincare products or hair care products. Any of those things like the good shea butters and the oils and any of the packaging. That's the cost of goods sold, and you're able to offset that as well. Contractors, okay, if you have somebody in a warehouse that's helping you to pack these products and ship them, you're able to offset that as well. Excuse me. Educational cost. So things for upskilling, right? So if you're trying to get additional expertise, education, licensing, training, development, you're able to offset that as well. Classes, conferences, seminars, webinars, workshops, all of those things are able to be qualified as an educational expense. So again, I hope this is jogging your memory. I hope it's giving you an idea of something that you can, leverage this year. And then all the years after this to offset some of those taxable income uh, revenues that we have coming in, because I know you guys are doing amazing things in business. I know you guys are doing amazing things in the corporate world as well. So again, you always want to be thinking, how can I offset that taxable income? Health insurance, healthcare and out-of-pocket medical expenses. So if you have health insurance and you have something that you need to do, like meet a premium or deductible before they start to, actually apply your health insurance, that can be leveraged for things like doctor's visits, specialty care visits, prescriptions, um, on-site or off-site, things like interventions, alcohol-related types of services, drug-related types of services. All of these things can be leveraged. So really be mindful. Just think of all the things that you are, experiencing throughout your life and your day-to-day operations that you could leverage. Your home office. If you're a structure as an S corporation or a C corporation, this would be like an accountable plan, but you're able to basically reimburse your business for expenses that you incurred by using your office, right? So that as well. Interest. So if you have any kind of loans that you've taken out to operate your business, those things like working capital loans, the Stripe, PayPal loans, those things have interest that come with them. So you're able to offset that interest and write that off on your tax returns as well. Inventory. So again, if you're a product-based business, that inventory that you have sitting in a warehouse somewhere or in your house, hopefully it's not in your house, but sitting somewhere that's going to incur costs because you have to store it, you're able to offset that as well. Okay. Let's see what else. Like I said, I don't want to overwhelm you too much because I know I'm giving you a lot, but legal and professional fees, so professional organizations and associations, things like your accountant, your tax strategist, your fractional CFO, right? Your legal team, your marketing agency, those types of things are able to be offset on your tax return. So one-time management consultations, marketing, engineering, technical, consultation fees, fees for things like website analysis, any kind of other like one-time logo or design fees for your website, or a product that you're creating, or a program that you're preparing to launch. Those types of things are tax deductible as well. So you make sure that you are keeping track of those things, maintenance and repairs, medical expenses. So again, I would love to be able to go through this whole list, but it's going to take a long time. If this is something that resonates with you, if you think that you could benefit from using this, please let me know. Again, shoot me a message, hit me a DM, comment in the comments, CYA checklist, and I'm happy to send that to you so that you can use this and apply this for this year and all the years after that, because I want you to win. I want you to harness the power of the tax code. I want you to harness the power of my education and expertise to be able to, benefit as a business owner and an entrepreneur and be able to build that wealth that I'm so determined and so just driven to make sure that I'm able to help you do, right? I'm here to educate and empower you to build wealth. I'm here to educate you and empower you to increase your profit margins, to grow your income, to position your business to be scalable in the future, to be scalable if that's what you desire to do. And all in all, I want you to win. So like I said, it's been a pleasure speaking with you. If you have any questions, comments, things that maybe you need a little bit more clarity on, feel free to shoot me a message, shoot me that DM. And if you do want that list, the CYA Cover Your Assets Checklist, drop me a line that says CYA Checklist, and I will get that right over to you. Until we speak again, friends, it's been a pleasure. I love coming here and chatting with you. I love that you are welcoming and you are accepting of the information that I'm sharing. And I just appreciate you. And I look forward to speaking with you in the future. All right, friends, we'll talk soon. Bye bye.